Good afternoon to you, Quinton. Why this sudden big increase in the shareholding in Clicks?
Good afternoon, Alec. Clicks is a business that we know quite well and we admire for a number of years, and we have been shareholders in and out for quite a long period of time. Like most consumer-facing businesses in South Africa, they've been quite hard hit from the start of the year, given the slowdown in consumer spending, particularly as unsecured lending sort of pulled back towards the end of last year. And based on our assessment of normal earnings, we think the business is now attractively valued, particularly relative to other alternatives in the market, which we think are fairly valued to overvalued. And it just so fortuitously happened that we were offered quite a large line of shares, which we took. So it just so happened coincidentally that we moved from 7 to 16.5%. When the company is not that large; it's just under 15 billion market cap. So when you do have an opportunity like that, you need to capitalize on those opportunities.
That's right. The other shareholder mentioned is Bailey Gifford. They had 10%. Their shareholding would now go down to 2%. When you say offered, how does it work? Why would they come to you, or do they put out the word and whoever bites first?
No, so we were active in the market buying shares, and they were obviously active selling, and so we had a standing order in, and it got filled, and then all of a sudden the seller offered more shares, and then we were happy to take that line as well. And it just so happened that they had quite a big line to sell, so they never approached us. We were just buying in the market in general.
You mentioned the valuation of the company. I saw briefly just before we started talking the PE of 19. I think that's a forward PE. So just a little bit more about why Clicks and the business model, because there's some pretty formidable other retailers out there. Why them ahead some of the others that you could have gone for?
Sure. Firstly, I think in private pharmacy, South Africa is a bit of an outlier versus the rest of the world in that the independents, which is the sort of the independent pharmacists, the corner pharmacists that we know well, they control about just under 2/3 of the market. So the formal players being the Clicks, the Dis-Chems, the Mediarites, the courier pharmacies, they basically control the balance. And I think over the years, South Africa, like most developed markets, the corporate pharmacies will ultimately increase their share at the expense of independents. And we think that legislation, one of the unintended consequences of legislation, such as capping the logistics fee, regulating the dispensing fee, etc., that will accelerate that consolidation, because all of a sudden it makes it more difficult for the pharmacist to make money out of the dispensary, and a corporate company like Clicks and a Dis-Chem that have stronger balance sheets, that have big front shops, that benefit from increased volumes as people come in through the stores to fill their scripts, they will ultimately be the winner. So we think that Clicks will continue to grow its earnings for many years to come. And so on our assessment of normal earnings, the PE is much lower than the forward PE.
Well, that was Quinton Ivan, Head of South African Equity Research at Coronation Asset Management. The share today, just when I last glanced, slightly down on the day. Of course, it's a signal to other investors. If someone like Coronation, who came top of the Financial Mail's rankings, in the recent rankings, if they're interested, perhaps other people should be too. But it didn't look as if the share moved too much there today.